Welcome back. Now at the half-year mark, Vodacom's group revenue ticked up by just 1%, while headline earnings per share took a knock of 19.4%. This as currency depreciation weighed on the telecoms giant, along with one-off costs related to the group's international business. A dividend of R2.85 has been declared. That's down 6.6%. Company CEO Shameel Joosub joins us with greater perspective on the performance. Thank you so much for your time, Shameel. Let's actually start there with those currency headwinds. Talk to me about the main pressure points there and really also just your ability to manage risk there.
Perfect. Thanks, Anat, thanks for having me on the show. So the numbers got a bit of noise in, to be honest, but the underlying growth is actually quite strong in terms of if you take some of the currency impacts. So essentially, we've had two devaluations that have played out into the numbers. Firstly was the devaluation of the Egyptian pound by 60% in March. So you're still feeling that impacts for the full year. That said, the net income's grown by 75%, so it's more than offset the devaluation, and it's grown. The net income's grown 10% in rand. So Egypt, although it's in the numbers and in the comparatives, actually is bearing dividends and is growing quite strongly with a 75% growth. However, in the numbers is also Ethiopia and the day one impact from the devaluation that happened about 2 months ago. And there was 100% devaluation in Ethiopia. And so we're taking the impacts of that, which is affecting more of the bottom line growth, both in our direct interest and in the numbers that are coming from Safaricom. The impact of that during the period was 1.1 billion rand impact that we or charge the income statement that we had to take. But the growth overall is still looking very positive. 206 million customers, good growth in customers, 83 million financial service customers. So all and 73.5 billion of revenue during the first half.
Shameel, still in that international business, I do also understand that there are factors that contributed to some of the dark spots, including from the DRC and also in Mozambique. What happened there, and can we expect these to just be contained within this financial year?
Very much so. So I think in Mozambique, really a repricing. So we've had to adjust prices to compete. It's down 15% in revenue during the first half of the year. Some of those changes happened late last year, so we should see the lapping of some of those changes in the second half of the year. And so, but what's good is now that we've repriced, we're actually seeing the growth month on month, so positive in that respect. And so, but we had to go through that hurdle, so to speak. The second one, of course, being DRC. Now, DRC is interesting because the top line is growing quite strongly. 9.5% in dollars. That's about a $700 million a year business now. So very, very good growth in terms of top line. But we've had to take some once-off impacts. Firstly, from taxes, we've used up GSS losses, so that's the first issue. And then the second one coming from once-offs that relate to basically lease renewals and some bad debt provisions that we've taken during the period.
Shameel, just coming back home, are things looking better in South Africa, also considering the fact that load shedding was also a big pressure point there for the telecom sector in general? But I mean, this year we haven't had load shedding and things are looking better on the macroeconomic side. Is that filtering through to your numbers?
Not yet. I mean, we're seeing a subdued growth of about 2.4% in revenue and about 2.3% in EBITDA. Margins are stable. So what we have seen is, from a cost perspective, the costs and the capex associated with load shedding is abated somewhat, and that's allowed us to put more money into capacity and more money into rural coverage. So from a capex allocation perspective, we can now put it to better use or better yielding capex. So that's the first side. So it's helped on the cost side, but we were also getting, I think we were one of the few industries who were also getting the benefit of when people didn't have anything to do, during load shedding, they also went to their phones. So we did have an uplift, which is helping us to offset. We more positive about the outlook because we see interest rates coming down. We see the exchange rate more stable. We're seeing inflation abating somewhat. So we are more positive that we'll see a bit more growth into the second half, but probably more into next year.
Yeah. Shameel, talking about investments and of course you're talking about the extra capital that obviously is coming through because of less load shedding, and obviously now you'll be channeling that capital towards other priorities. I'm wondering if your capital expenditure priorities also maybe would depend on whether the massive deal goes through or not, if you do manage to maybe get it to a point of an appeal.
So in South Africa, we investing over 11 billion rand a year. That's just on the mobile network. Traffic is growing like 34% a year. So just keeping pace with the growth in traffic is very important. Being able to give our customers a very good service. So that's the one side. The massive deal would have been an uplift to that. So it would have been between a 14 and 17 billion rand investment into fiber in the country through a 30 to 40% stake in Massive. And then it would have been Massive would have then spent 25 billion rand of capex over the next 10 years. So, it's a massive investment into fiber. And I fear South Africa is worse off because the deal hasn't been approved.
Well, actually, I do note that you do await for more details from the Competition Tribunal. Have you had any engagements with any of the stakeholders in terms of a way forward, and maybe even the competition authorities themselves?
Well, the government and the Department of Trade and Industry and so on have come out strongly in support, and they went through a very rigorous process of making sure that we commit to a lot of public interest, including 10,000 new jobs and 1 million rural homes and so on. So there was massive kind of, let's say, value adds beyond the deal that were also going to provide jobs and a boost to the economy. So and that's lost, I'm afraid, with the rejection of the deal. So there's still a lot of support for an appeal, but we're currently considering our options, and in the next few days decide if we're going to appeal.
All right. Well, Shameel, we will be looking out for that, but that is where we have to leave the conversation. Thank you very much for your time and giving us more detail on those numbers that came out from Vodacom. That was Vodacom CEO Shameel Joosub.